Welcome everybody to the channel. With us today, we got Dwayne. How you doing, my brother?
Say, bro.
All right. And we got Mesh.
Always a pleasure.
As usual.
Always happy to be here.
Yes. So today, Dwayne, mortgage specialist, analyst,
economist,
financial
planner,
realtor, and I'm a realtor, and we want to talk to you about today regarding the rate cut and what is actually going on, because what I'm seeing, Dwayne, like, two parts of the story.
Yeah.
Half of the people are saying everything is good, we're ready to go, and half of the people are saying, well, it's not how it seems.
Yes.
Yeah.
Elaborate, if you don't mind.
I'm going to be straight, blatant, and talk the way it is.
Please.
The half the people say it's all good are wrong.
Yeah.
Are missing every economic indicator out there. Are not looking at economic history and just making stuff up. It doesn't make any sense to me.
Why?
Because when we go back to economic history first with rate hike cycles, so the cycles where rates are coming up, it's a pattern that's happened since 92. Rates come up, they pause, then they start coming down, and then we hit a recession 100% of the time. 100% of the time.
So you believe in that 100%?
Well, it's not even just, so 100% I believe in it. There's not even just that history. Unemployment's up by 33%. The last recession is up by 37%, and we haven't even stopped yet. Businesses are going under, like in 2008. Our GDP per capita is actually in a negative basis. Hasn't been seen before on a yearly basis since 1990. It's being covered up. So I don't know how anyone on an economic basis with an economic background can say everything's going well. They should be like fearful like myself.
Yeah.
Getting ready for what's
So
really
what do you
happening.
think, Mesh?
I mean, that's definitely a very drilled down specific view of it. I think the other end of that equation, I agree with what you're saying. The other end of that equation is like retail or consumers. And consumers who don't have a strong understanding about economics understand what it feels like at home, at the dinner table, buying groceries, utilities have gone up, right? And so what I think is going to happen for those that have been sitting on the sidelines is, look, once they start feeling, as long as they have a steady job, okay? Once they start feeling that interest rates are coming down, the choke point is releasing, I think, mentally it's that whole thing of like happy days are ahead. The worst is behind us. Just like now, behind the scenes, you're absolutely right. Like from a financial standpoint, it may not make sense, but I think there's a lot of consumer sentiment on the sidelines that either is just looking for optimism. And I think rate cuts bring a level of optimism. And sure, there's a U.S. election coming. Sure, there's all these things coming. Hopefully, there's a shifting of guards. That always brings a sense of, renewed hope. And then what happens is, regardless of what's happening in the economy, I think what ends up happening is, once we get out of this recession, okay, I'm not using the R word, but it is what it is. Okay, let's say recession.
They're going to call it.
Now let's call it.
So let's say once we get out of the recession, it's like, everybody comes out of this long nap and then they're like, oh, okay, we're out of it, great. But once again, it's almost like it's too late. Then everyone's gonna flood the market. There's still not enough units. Okay,
supply problem.
Rates have come down, so now affordability is back up. It's not changed, but now they can get into better units. And then the frenzy starts. It's the same frenzy that we've experienced in Toronto that maybe a lot of other markets haven't. And that's why I think Toronto's a different beast than a lot of other markets. We've probably seen the last 3 cycles where conventional, terminology was telling us one thing or way of thought was exactly what you're saying. But darn if I know, right? Because it's like a lot of people are doing stuff completely opposite. And I think some of that will still reign true, right? This go around.
So you brought up, the release of the choke, right?
Yeah.
So what do you think now? Because we had 2 rate cuts within, a quarter, and each rate cut was 0.25, which brings us a total of 0.5%.
Correct.
Right?
Correct.
Will that release that pressure or the choke, and will like buyers wake up or the enthusiasts like how does that work?
Absolutely not, by the way. Not even close. So Mesh is right on one thing.
Right.
Well, most things, but one thing for specifically. Real estate is the first into a downturn and the first out of a downturn. Real estate has taken us out of a recession 6 of the past 7 times. It wakes up
Interesting.
before. So what usually happens, you're 100% right. People are like, oh my God, I'm worried about the recession. I'm worried about my jobs. I'm worried about this. Rates come down, property prices come down, and then someone's like, wait a sec, I'm not losing my job. I'm actually very good fundamentally. Then their mind goes right back, as you said, into it. It's not the actual rates itself. is once they stop the fear of losing their job, stop the fear of going down further, and realizing, wait, the world is not stopping. Things will get better.
But that takes a little while.
It takes more time than that. And on the second side of things, we'll go back to the 0.5 drop. We have not been this unaffordable on a real estate side in Toronto since the 90s. Yeah. It's going to take both. I hate to say it. Prices down, rates down, then it's going to come in. We're so far unaffordable, it's crazy. Yeah. Back to our GDP per capita, we've actually had a negative GDP per capita for 2 years, which means individuals are making less. In the last 10 years, it's the first time in a 10-year period since the Great Depression, it's been stagnant. Yeah. It hasn't moved. But we've had rates that had the fastest interest rate increase in Canadian history. Inflation, not seen before. We're talking about people struggling. So it's going to take a lot to come back. But I always say it will come back.
Okay, so hold on a second. Sure. So now we're at a point where we're saying, in order for the affordability, for the real affordability to get back on the table, we need the interest rates to come down significantly at this point, and we need the prices to come down significantly in order for that equilibrium to happen and that mindset to start rolling. Yeah. Can we see that in the market?
Yeah, so I think another way to look at it is I think most people who have been in the GTA, the Greater Toronto Area, who live in Southern Ontario for a while, will agree. With inflation and with pricing, it's not so much what is the cost of something anymore, at least this is not how I look at it. It is like, what is the affordability? Correct. It's a completely different thing. So whether 100%. Something that should be $200,000 is now $900,000, guess what? If it costs you $1,800 a month versus $7,000 a month, you're going to get it because that's just the function of life. Sure. Okay, that's the function of life. Mm-hmm. The one thing that I think we have that's unique to other markets, and other big markets have it as well, is the fact that we have part of the formula is immigration. I mean, we're all immigrants at some capacity.
Nothing wrong with that.
And in order for us to continue raising the tax base, continue to grow, we need to import talent from across the world.
100%.
That's not going to stop. Yeah. And most of the places that people are coming from still view real estate as the primary asset in their life.
100%. Right? We're not getting away from that.
Because of that, I've noticed a lot of people coming within the first couple of years, first thing they want to, even though like I tell a lot of clients, listen, renting's not a bad way in the beginning to figure out what you want to do, and then but most people we want to get into buying. Yeah. We want to get into buying, right? So
well, it's the dream, right? I mean, too.
It's ownership, it's all those things, and I think because of that, that might throw off some of the other things we talk about because, there's a steady demand of people that are sitting on potential cash or that are bringing assets with them from somewhere else that are just unscathed with what the local geopolitical situation is, right? And that's what keeps the demand up in certain pockets. Not all of it, but certain pockets. So that's something to kind of keep into consideration too.
Yeah. Can I add to that for a second?
Yeah, please.
Absolutely.
Demand.
Just give me that. Let's put it here.
There we go. LG, let's go. So I talk about this all the time. Yeah. Demand supply is a huge economic indicator. Yeah. Affordability will trump that all day long.
Of course.
You can't get around an unaffordable market.
100%.
There's no way around
100%.
it. So back to the affordability side and stuff, I get the fact that we have demand will outstrip supply again. But if the market's unaffordable, it can't go. There's nowhere to go. People can't buy it.
100%.
I say say for example, you go to a country or an island where there's something everyone wants, it's $1 million, but everyone makes $10 a day. You can't buy it.
100%.
It's just there. Affordability is the first thing that has to come back in line. And back to the rates thing, which people keep forgetting, and I don't know why. In 2007, 2008, when the states went through their correction with real estate, their rates dropped by 2% in a 2.5-month period.
2%?
2%. Wow. Rates do not come down faster than they go up. Yeah. Once the crisis hits and people realize it, it comes down fast. And they went down by 0.5, 0.75, 0.5 again. It was crazy, the drop. Actually, that's 1.575, but crazy the drop. I anticipate that happening soon too.
So hold on a second. So we've seen a 0.5 point drop within 3 months, right? Yeah. Okay. So are you saying that it's kind of the bank is kind of trying to help in a way or trying to forecast or be ahead of the curve, or what is happening? Why would they drop the rates?
They're dropping the rates because they see the trouble and they see what's going on.
That's what I'm at.
they're still misguided by looking at inflation. Inflation is driving a car in the rearview mirror. Let's look through the windshield now. Inflation was here. They've conquered it. I have no problem saying they've conquered inflation.
Got it.
And everyone keeps talking about inflation, but like in what we're looking through, we should be looking at unemployment, businesses, stability of the market, GDP, right? Because once the recession really fits in, rates will drop, and I think it's going to be a worldwide recession.
Yeah.
Rates will drop in half. Oil will drop in half, and no one will talk inflation again. So inflation shouldn't be what they're looking at. So anyhow, long story short, they're dropping it slow because they're still worried about inflation. I don't get why they're looking at the inflation side.
Well, maybe it's safe to say that there's stuff above our pay grade from a political standpoint, from an economic or business standpoint, that special interest groups have a vested interest to keep it like this. Like guys like us who are on the logic train, it's like it doesn't make sense to us.
Correct.
But I always say, look, if you look at the U.S., it's a big election year.
Sure.
You know, if our animated friend gets in, he's already made some bold statements.
I'm sorry to laugh. That's funny.
Yeah, if he gets in, he's made some bold statements that they're going to drill, baby, drill, right?
Yeah.
And so, once that happens, we're all attached, whether we like it or not, to the superpower down south of us.
Yeah.
So if their economy's ripping, ours has to follow suit to some capacity.
Correct. But even on that side, I don't know if you want me to go into the U.S. a little bit.
Yeah, sure.
People don't realize they're on unsustainable debt habits that can't keep going. They're at 7%, not seen before ever.
Yeah.
When they cut that back, they're in negative GDP. That's a recessionary trend as well.
Yeah.
They're not as strong as people think.
Yeah.
And they will get hit when things come through.
Yeah.
And people aren't looking at that aspect of it. They can't spend forever. Just like us, our debt is actually pretty well in line.
Yeah.
So we're okay to spend a little bit more to help out the economy. They can't help anymore. Do you know they actually spent more money during COVID than they did during the Great Correction of 07,
Yeah,
08?
I believe that.
They printed more money. There's so much more in economics. And when you're talking about, like, I get they have political, our Bank of Canada. One thing I don't get, and maybe you want to cut this out, why are they lying to us? They're too smart to be saying this shit.
I know.
Yeah.
And I don't know how to go too far in it. But at the
yeah.
end of the day, he's been wrong since 2020. April 2020, he says that rates are going to be low for a long time. We followed that in a year and a half later by rates going as high up in Canadian history, fastest ever. Then all of a sudden, inflation hit. And he's like, oh, this is not real inflation, it's transitory, it's going to go. That was the worst inflation in 40 years. Now they're saying rates are going to be held high for a long time. And I'm like, guys, everything you're saying is an economic fundamental impossibility. And if anyone out there has that type of background, we should be yelling at them, stop lying to us. Let's help people through this. And only the truth is going to help people through.
Well, I think this is one of those situations where, not to put on the tinfoil hat, get into our conspiracy theory, but I think most of us will agree at the table that there's stuff that is above our purview that happens that never is to the benefit of the majority of the masses.
100.
It's the few people that, I don't want to drop BlackRock, or I don't drop these names yet, but for lack of a better term, there's a deep-winded plan, unfortunately, that has them staying in control and power longer than the rest of us.
So I have a question now. So you touched on immigration, which it's fine. Okay, so we need more bodies, we need more this, we're growing, etc. Fine.
Yeah.
Now, on the other side, you have everyone else in the media saying that we have a housing shortage, missing units. We're down by 2 million units in Canada, 1.5, whatever the X number is, okay? Is that really true? Because look, why are some of the units still available? If it's such a huge demand, we come back to the affordability.
You can't buy it. Because it's not affordable right now. But if you want to go on that train as far as the supply side, I call it housing supply is like traffic. In a major city, you'll never fix it. You just try to do your best to keep up with it.
Yeah.
So as soon as you get through the one issue, we're back to the supply issue. We'll never keep up with immigration. We'll never keep up with that. Housing will always continue to go up in the long run in most major times.
Right.
And it's because of the supply. But just like everything else with economics and recessions, it happens like once every 7-8 years. We barely go through this.
Sure.
So this comes down, people talk about it, and then back to the supply issue where pre-cons and stuff have to happen, have to get going.
Back to the traffic.
Back to the traffic. You can't solve it, you got to do it. So the supply issue is going to pick up as soon as you fix this issue right now, which is a short period of time. And I know it seems like a long period of time, but it's a short period of time in retrospect. Last time we went through a recession was 2007. We're 17 years later.
17 years later.
You know what I mean? So it's few and far between. It's just getting through this. So, and then back to supply issues.
Yeah.
Okay. Fixed variable?
Love it. I actually talked about this morning about variable all day long. Variable all day long. I hate to be rude, but I'm going to be very blatant. Anyone taking a fixed rate is like taking a variable rate in 2022 at the beginning. Rates had nowhere to go but up. Now rates have nowhere to go but down. You're missing the boat. You're going with fear over logic. Unless, of course, sorry, let's go back. If you're risk adverse, you can't go variable. Sure. If, for example, you need to qualify or certain things, but on a quantitative basis and only about numbers, variable makes sense. I don't even know why anyone talks fixed anymore, to be honest.
Yeah.
Right?
So what do you see on the field now? So real estate related, yeah, I mean, as a realtor and
yeah, so I think I think we're all saying the right thing. What I want to do is zoom out a little bit and not look so far downfield, but I like to look at life in terms of, cycles. And so we've got 8 cycles ahead of us, which is technically 2 years. Okay.
Got it.
One of the biggest challenges we have with the pre-con market right now is a lot of the units that are on the market were sold at the peak in 2019. So 2019 to 2021, coming out of COVID, things were very high. And so everybody had all this extra money, stimulus checks, extra money. There's all this liquidity in the marketplace that needed a place to go. Yeah. So unfortunately, this is life. Builders are some of the first ones who anticipate where the market's going, and they don't give you an advantage. They just price same to what's going on in the marketplace. So when the market goes down, one of the hardest problems is finding financing, because now those same units are not qualifying based on what you bought those units at. So there's a word in the business called absorption, right? We all know it. Absorption basically means that if no other units went on the market tomorrow, how long would it take for all these units to get absorbed? And unfortunately right now, there is a lot of units that need to get absorbed, but people don't qualify for, and they're not cash flow positive for. Now, there is light at the end of the tunnel, in my opinion. Okay. I think we're about 18 months away, hopefully less, maybe 2 years, but I think within 18 months, that absorption rate will be there as people can start affording those units again. Yeah. Where I like to take a stand, or where I have had a lot of success for my clients, is the pre-construction business as well, but we only look at A properties that are closing in what I call the sweet spot of the market. So I think the sweet spot's coming for us in this cycle. And I think that's going to be 26, between the tail end of 25 to the end of 26. Okay. So if we have projects right now that are coming to market that potentially are going to be taking occupancy or closing between 26 to 28, you have a much better chance of reaping benefit from those, simply because we'll be in a lower interest rate environment, the demand will have returned, and the absorption has been absorbed. Yeah. So it's kind of like the perfect storm. So that's what I see right now. Right now, there are options. If you're sitting on cash, there's no better time than right now. Yeah. Even if it goes down another 5-10%, you work with a great broker like myself, like Ellis, like Dwayne here, and guess what? You're gonna already get that built into the price. So you don't have to worry about, let's wait. You want to move when not everybody's moving, so you can get the best discount. So that's what I think is available to us right now. In a year from now, that may not be the case. Yeah. Right. Yeah. That's just my gut. Now, what do I know? I've only been doing this for a little while. What do I know?
No, of course. I mean, like we know what we know, but we can also see what is happening, and I think we are the best graph because we are going through the graph. A month goes by, they come up with the graph, but we are building the graph
as we go.
So as we go, right? So, can you touch the bank atmosphere when it comes to buyers buying and being qualified? Are the banks being more easier now? Or is it still tight?
I'll be honest. This has not been tight yet. I think it's going to get tighter, but it hasn't been tight yet. Like technically speaking, as a mortgage agent, I have access to 40 lenders out there.
Got it.
So the banks, certain banks do get tight and they loosen up and they go back and forth.
I think got competition between them as well, right?
So you can always move around the banks and go through things. It hasn't been that hard to get mortgages. It really hasn't, right? Most people, not to be on the pre-con, it's not really the cash flow or the qualification, it's the appraisal side.
Yeah.
And when I talked to Mesh on the last time, it's and I know you guys are looking for projects that sell closer to current market value. That's the key, to be honest, in pre-con. Sure. That's the key. Because at the end of the day, as I said, you can always qualify with 20% down. I'm getting that mortgage done 100% of the time. There are so many lenders that will do it. It's the problem is if it doesn't appraise, there's no way around it from anyone's standpoint.
I think second to that point, I agree with you that you should be looking at something that's relative to the market. However, I also like to find and identify projects that there's a level of uniqueness to them. Meaning, it's a standalone in an environment where there's no other competition for that unit. It's beside hospital, transportation, major source of employment, these things that are going to drive. Like one project, I won't drop the name, but you've seen us talk about it quite a bit. It's right on the brand new Etobicoke Civic Center corridor. Now, what we know for looking downfield for the next decade is that whole Bloor corridor is being expanded. They want urban intensification, and the money is coming from federal and provincial mandates. So what does that tell us? If any one of us knew what was going to happen on Highway 10 circa 30 years ago, on Lakeshore circa, we would have bought a ton of these cottages that were 100%, $50,000 that nobody wanted. And so that is the advice that we want to bring to our clients, to our investors, to our friends, because number one, I'm an investor first. I look at projects that I want to invest and invest for my children and I want to make money on. So I don't sell anything that I would lose money on. That's what I look at. Now, have I lost money? 100%. We all have. But if we look at it from that lens, and it's not the short, I think what happened in the last decade, look, cooler talk used to be hockey, which is painful, weather, which is also painful, and then real estate became the darling, right? Let's be honest, everybody and their mother who's never in it is just, you got a regular job, you're working 9 to 5, you're grinding, you're paying your taxes, and then you hear people saying, you know what, I flipped the house, I made $100,000. I did this, I just lived in my house, and then now the conversation moved to that narrative. So that still is a narrative that I know when I'm in everybody wants to talk to me about real estate. I just say, let's talk sports, right? Let's not talk real estate. But that's not going away, because I think the vast majority of Canadians still have a big chunk of their retirement in real estate. So as long as that is there, I still think there's always going to be an opportunity to find the right bets, to hedge on the right thing, partner with the right guys or gals, and guess what? There's a way to still make money in this market.
100%. 100%. Sorry.
No, it's fine. So you touched on appraisals. So in your experience now, like you've been dealing with mortgages and with agents and buyers and all that stuff, are you finding majority of the homes or condos or whatever the case is not appraising at the market value, and you have to kind of go back? Or this is pretty much leveled at this point? And
again, not to go through it, usually on purchase, resale, stuff like that, appraisal coming through. People are pretty on that. It's just on the pre-con market, again, what's happened over the past couple of years, I think it got a little carried away. My thing is that it had to go up by 5% a year or 6% a year just to appraise. And Mesh is right, there's money to be made, real estate's the best investment ever, but you have to always look at the risks associated with the return and what you're doing.
Agreed.
And that risk of having to go to that appraised value is so great, right? So the appraisals are coming up. I just think I don't know if it was the bill. Again, I don't know pre-con like you guys. I don't know if it was the builder or if it was or if it was the government, why it was so far priced, like that high up.
Well, because it's neighbor's competitor, right? Like, I mean, if you have your unit at X here, so my tower is gonna go at XYZ, and then his tower, and that's how it works, right?
I can say the G word. We can all say it's greed.
It
comes down to greed, right? Unfortunately, and once again, we as much as we have a lot of developers and builders in the game, it's still a very small, tight-knit
But
group
there
of
were
guys.
clams too, man. There were clams too.
I know, but they all talk. And like if all three of us are building, it's what are you pricing at? What are you? And even if we don't talk, what are they pricing at? So nobody wants to be the best deal on the block unless they're struggling. Right? Because then everyone floods there, and now it's sad.
Doesn't make sense.
So that's what's happened. And now what's happened is what people don't tell you is a lot of these developers right now are offering massive incentives. They may not be advertising.
Huge stuff.
But so even though it's higher than the market rates, you're getting some of that back in closing costs, in development fees. So your net cost per square foot is actually in line with the market. So that's what it is. But they don't want to drop because people would get upset those that who bought a little bit higher, they don't want to see the builder dropping $200 a square. Rather than be like, we'll give you an incentive.
They're being creative too.
Exactly.
Yeah,
We'll give you this, we'll give you that, so it works
do
out the same. But that's kind of what's been happening.
Yeah,
I mean, listen, we have been sitting on tables with all these, huge builders and developers in the city, and all that stuff, and they are being also planned. Like, they have to buy the land, they have to get the approvals, they have to put the money down, they have to, jump through the loops, and they have to commit to 30, 50, 70, 100 stories.
Yeah.
So once you start developing, you have to go through, my friend. You know what I mean?
Get it.
So I just wanted to jump on that. You brought up a great point.
Yeah.
Because the other thing that people don't understand is, look, at the end of the day, a developer and a builder is in the business of making money.
Yes.
Okay. Let's call it what it is, and people need to understand if they're going to lose money or it's not going to work for them. If they have the land which they've had for decades, they're just going to sit and wait. So that adds to the problem that we talked about of like absorption and then demand. They'll basically say, we're sitting on the land, we see prices going down, we'll renegotiate, and in 2 years, then we'll break ground. And by then, that project that would have been online 2 years sooner is now bumped out. So it starts that whole cycle again.
It happened last year, it happened this year.
But I think one thing, again, I don't want to take over the conversation, but one thing that's a bigger thing that people, and I don't know because you guys know better than me, if the builder has to build at that price and the consumer can't sell at that price, we have a bigger problem than we think about. That's a huge problem.
That's the whole story of this conversation.
How are we going to circumvent that side? Because at the end of the day, I know the government they're 30% in prices. I know there's certain aspects, but if you can't do those two things, there's nothing going to happen.
One of the things that you've noticed now, this happened in the 80s, this happened in the 90s. Builders have stepped in and said, listen, we will give you a mortgage rate for 3 years at 2.9 or something that's extremely reasonable. Okay? So it helps them close on the unit. They basically say, we're going to guarantee you this. Now, there's terms and conditions for that. I think by doing some of that, it allows those prices that are maybe outside of market prices to once again be affordable now based on where the rates are. So there's a lot of creativity that's going on for the builders that have already started that and need to close. Like, there's a bunch I can know here in Mississauga, in Etobicoke, they're like, hey, we're going to guarantee you for 3 years at this, gets them out of this turmoil. And then basically, hopefully by then they're into those type of numbers anyway.
But listen, what we can all agree in that let's say decade, some people, not most, but some, and you brought up the word greed. They were so greedy. They wanted to buy every single unit that they saw on internet, that they, walk through, like, and I think it's called, is it called over leverage or
over leverage?
Or you know what I mean? So sometimes we see these cases now, and you brought up the point in the beginning. Some people will realize, okay, some things are going to come down, prices will level out, adjust, or
a combination
of both. And people will realize, hey, listen, okay, I got it. I still have a job. I can still start moving, and I have to continue living. And if the affordability level is on the table, we got a deal. That's what you're saying the whole time. Now, having said that, there's also going to be, some of your neighbors and friends that are overloaded. In the best possible scenario, they were overloaded. And now when there's a shake, we're like, oh, things are falling apart. Yeah, because they were falling apart
before that happened.
In the calm water. Never mind. You know what I mean?
No, for sure.
So I think it circles back to the beginning of the conversation. So exactly what you said, in my opinion, ties into what Dwayne said at the beginning, right?
Got it.
I think people that have come through this and who have survived, maybe they've lost some money. You never lose money, you just learn. That's what I've learned at stock market trading term. Today's a great day. I learned a lot. Right? So as long as you can get back on the horse, you'll be okay through the next cycle. So I think these last couple of years, for a lot of people, myself included, I've learned a ton, where I will start, instead of hopium, let's leave hopium till the end, start off with a sound plan, get good advice from people, and maybe you don't buy 3, you buy 1. And then write it out and have like, 3 case scenarios on it. Okay, worst case or best case, hey, if you got to close on it, you have the ability to close on it. Be able to close on it and write it out for a couple of years, okay, great. Claim the losses, talk to a good accountant, talk to a good planner. Number 2, you're fortunate enough to be able to sign it, flip it, you flip it. You pay your taxes, you move on, great. Win-win, let's go. And then the third one is if you got to rent, you rent. But I think most people, not most, a lot of people that I've run into that are just upside down, unfortunately, either they knew what they're doing, so they got to own up to it. Okay, that's the first step, admitting.
Yeah.
The second step, also admitting when they had the wrong advice. Maybe you're working with the wrong professionals who don't have your best interest at heart.
100%.
They're just looking for the quick buck. You need to get rid of those people and come to guys or gals who have your vested interest at heart. Integrity is huge. And then the third, you know what? Sit back. There's nothing wrong with zooming out and waiting. You know, I think the last few years, all of us at this table, last decade even, you get caught up in the hype. Toronto's in its element right now. It's growing.
It's a monster city, man.
You get compared to other big cities. The one thing that we don't have compared to the other big cities is time. We're still a new city. You know what? That's what I would say. Toronto is on its way, 100%. It's not going anywhere. It's only going to get bigger, but you just need time. That's what I would say.
No, I like it. Cool.
So, for the next decade, okay, 2035, what do you see? Just summarize it quickly. How will this continue? We will go like this or like that, or are we gonna see the light at the end of this tunnel, or you know what I mean?
The light at the end of the tunnel is happening.
Yeah.
It's not a train coming at us. It's an opportunity of a lifetime.
Yes, let's talk about
Let's talk about the opportunity.
End of the day, as I said, what we're going through is generational, meaning we haven't seen something like this since the 90s. It's not going to happen again in our lifetime. It'll happen again a long time from now. But once we get through it, and if we are able to see or grasp that opportunity, we are going to make so much money. Boom. Secondly, back to the real estate side. The reason why everyone's talking about real estate, I have no problem saying it is the best investment ever. On a risk-reward basis, you will never beat real estate because of the leverage as long as you do it properly.
Yes.
The problem with real estate, unlike stocks, is it's the best investment, but it could be the worst one if you take bad advice.
100%.
Because that's when you lose a house. That's when you go bankrupt. That's when so much stuff happening.
100%.
But a good portfolio on a real estate investment will beat almost anything on a risk-reward basis in good markets. In bad markets is where you need to prepare and make sure that you're okay getting through it. And back to, I always say, I talk about cash management, no longer cash flow. People got to realize cash management means I got to be able to manage my cash flow for the next couple of years. I got to manage down markets. I got to manage this, because it's not what happens in up markets that happen. It's getting through these down markets and prospering.
Absolutely.
That makes any sense.
Agreed.
Okay, so I think it is very important to sit at the right table, speak to the right people, get the right advice. Dwayne, thank you so much.
Thank you so much. Appreciate
it. Mesh, as usual, thank you. Please like, subscribe, and share, and see you all next time.
Let's go.